The views expressed in this podcast are not to be taken as either trading nor financial advice. Neither the announcer nor the Sirius Report make any claims to be certified financial advisors, and all reporting is dedicated solely towards being both informative and educational. Good afternoon, everyone, and welcome to the Sirius Report Market Wrap-Up for Tuesday, October 15th, 2024. Well, it's earnings season, and primarily we had on Friday and then here on Tuesday. Many of the banks reported their earnings. JP Morgan on Friday and Bank of America, one of the big ones, did today. We're not really going to get into what their releases are because more often than not, it's just nothing more than gobbledygook and newspeak. But the important thing is what the Fed, as well as the New York economic survey came out with, looking at the general look at the economy rather than what is going on Wall Street and financialization. So we're going to take a look at that. But first, let's go ahead and jump in and see how the markets fared today. Well, after getting up to 43,000 and a new all-time high in the Dow yesterday, the Dow fell 324 points to close out the trading session at 42,740. Meanwhile, the Nasdaq was down 187 to 18,315, and the S&P 500 was down 44.59 to close out at 58.15. In the bond markets, yields fell a little bit on the back end of the curve as the 10-year remains over 4%. It dropped 0.039% in the yield to close out at 4.034. Meanwhile, the 2-year is sitting just under 4% at 3.95. In the dollar markets, well, the dollar did fall below 103 a few times. It was kind of a jigsaw day, but it ended up down just 10 cents to close out the trading session on the DXY against a basket of Western currencies at 103.20. Meanwhile, gold and silver had a little bit of a move today. Silver was up 29 cents to close out at 31.55 with a high of 31.75, and gold was up $13.20, closing out at 26.62, falling just short of a high of 26.69. Meanwhile, crypto has caught a bid over the weekend and into Tuesday. Last 24 hours of trading saw Bitcoin up 0.48%, about 0.5%, at 66,378 with a high of 67,850, while Ethereum was down 1.73% at 2583. Now, as many of you know from podcasts of my past and here over the Sirius Report for a number of years, I am not for or against cryptocurrencies. As a matter of fact, I'm neutral. But the reality is I've always wanted them to be defined as what they are, not what one entity wants them to be, or in reality what they are and aren't, etc. But we're going to take a look at two different viewpoints and why they chose those viewpoints in regards to Bitcoin. Fed's Kashkari says 1.3 trillion market cap for Bitcoin is still useless. Meanwhile, BlackRock's Larry Fink strongly disagrees. Now, of course, Kashkari is tied to the Federal Reserve, which relies upon the dollar being the prime and sole currency. And so Bitcoin and other cryptocurrencies really are an anathema to the Federal Reserve and what he represents. But Kashkari is not really the most intelligent tool in the shed when it comes to economics and finance. So you really expect this kind of opinion from him, especially since he likely hasn't taken even 20 seconds to find out what cryptocurrencies are, aren't, etc. But Larry Fink, on the other hand, has. Why? Because there's money to be made in cryptocurrencies, just like there's money to be made in any other security, real estate, etc. So Larry Fink's obvious like of cryptocurrency is not in the currency itself or what it represents in regards to an alternative to the dollar. It's in the fact that he can financialize it. And Larry Fink and BlackRock have already set up ETFs. They have done multiple different derivative packages, And they really don't bother with the currency itself. They just do the derivatives off them. Options, trades, calls, puts, CLOs, and different swaps against Bitcoin, which is completely against what Satoshi Nakamoto and the Bitcoin white paper and all those who claim that cryptocurrency is going to be the future of currency represent. Moving forward, in the oil markets, we had a little bit of a dump today. WTI crude was down $3.25 to close out the trading session at $70.58, while Brent crude was down $2.74, closing out at $74.72. And it's kind of interesting that the Murban crude, which is one of the more Middle Eastern markets, is actually getting very close to par with Brent crude, or even surpassing it here eventually, which would mean that the UAE, Dubai, Saudi Arabia, etc., any of those may start getting to the point that they become a benchmark far more than Brent crude does. My reference here is Murban crude is at 74.45, while Brent crude is at 74.72, just a difference of about 27 cents. We'll take a look at some economic data. The Empire Fed manufacturing crashes from a 30-month high, which means it was manipulated, to a 5-month low. After 9 straight months of contraction, September surge to 30-month highs in the Empire Fed's manufacturing survey was greeted by all as proof that Bidenomics or something was working and everything was awesome again. So, vote Democrat. October is a very different matter, as the survey crashed from plus 11.5 to minus 11.9, a delta of gods, probably 6 or better. This is the lowest since May and the biggest month-over-month drop since January. It's a measure of current new orders plunging nearly 20 points to minus 10.2 after climbing a month earlier to the highest since April 2023. And it's just like we saw with after the revision on the jobs report, we suddenly have this massive influx of jobs that really didn't happen. They were all seasonal adjusted. And of course, everything is a political stunt leading into the election. Well, interesting enough, the latest New York Fed survey shows that stagflation odds are increasing as inflation expectations rise. At the same time, the delinquency fears are hitting a 4-year high. In recent weeks, on multiple occasions, I want to skip this part. Overnight, it was Deutsche Bank's chief credit strategist, Jim Reed, who observed that U.S. 5-year inflation swaps have seen their largest 5-week climb since just before SVB's Silicon Valley Bank's collapse in March of 2023, an event that shifted the narrative away from 4 more hikes to imminent cuts for a period of time. And all of this is happening, of course, immediately after the Fed decides to cut interest rates. To be fair, it's not just the 50 basis point Fed easing itself that has changed the inflation and rates outlook of the last few weeks. Expectations that the ECB will move more aggressively, renewed geopolitical risk, and potentially large China stimulus turn the oil price and other commodities higher. But the reality is if you take a look, many corporations are getting rid of individuals. PPI and CPI commodities are higher. The monetary inflation, because the foreigners are not buying our treasuries and that money is getting stuck in the system, is increasing inflation. And there's not a darn thing that the Fed can do about it until the Congress and the government stop spending, deficit spending, and cut back on their fiscal responsibilities. Well, Biden administration is pulling a card from the Trump hand. Biden admin mulls export caps on AI chips to some countries. So here is one of the more significant things. I'm not going to get too much into the weeds on this, but the reality is that the U.S. cutting back on exports of chips to high-level chips to China has forced China to increase their manufacturing, their innovation, and their productivity. And now China could be very well on the cusp of being an exporter themselves. So just like the way that the global South, the BRICS, and the multipolar world allows for an alternative to the rules-based system and the Bretton Woods financial system of the West, so too is necessity the mother of invention when it comes to exports and high technology. So this is likely one of those things that's going to backfire, and very quickly, unfortunately, for the Biden administration, they're probably not going to be in office enough to see what the ramifications are, because even if Kamala wins the White House, many of those aren't even going to know what economic policies were integrated, as many of Joe Biden's administration are going to leave office once he does. Finally, the last thing we're going to take a look at, speaking of how great the economy is, Boeing, desperate for liquidity, is going to sell stock. Just days after Boeing announced plans to cut 10% of its workforce, it is now also filing a $25 billion shelf registration this morning. The universal shelf registration provides flexibility. For all intents and purposes, what they're doing is they're taking much of their outstanding stock that is not in the public arena, and they're dumping another 25 billion of it to try to get liquidity. Now think of what they needed during COVID. They needed $60 billion of bailout from the government. They've also needed a few other bailouts, and they're not getting the contracts because their equipment that they're manufacturing is falling apart. So Boeing is one of those that stands on the cusp of completely scuttling itself, being a buyout candidate, and by increasing the float and trying to get money to save off, it will be interesting if somebody like BlackRock just simply wants to go out and make a purchase and buy of Boeing altogether. Anyway, I want to thank everybody as always for stopping by to get your market wrap up for Tuesday, October 15th, 2024. I want to thank everybody as always here at the Sirius Report community for being a part of the discussion. Don't forget to subscribe, like, share, comment, or send this out to anybody you think would be important. And until the next time we get together, have a great Tuesday.